and gentlemen, good day and welcome to the Ddev Plastiks Industries Limited Q2FY26 earnings conference call hosted by PhillipCapital Private Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ritu Chavan from PhillipCapital Limited. Thank you and over to you, sir.
Good morning, everyone. On behalf of PhillipCapital Private Client Group, I welcome all of you to the Q2FY26 earnings conference call of Ddev Plastiks Industries Limited. Today from the management, we have Mr. Narendra Surana, Chairman and Managing Director, Mr. Ddev Surana, Whole-Time Director and CEO, Mr. Rajesh Kothari, Whole-Time Director, and Mr. Arihant Bothra, Chief Financial Officer. I now hand over the conference to Mr. Ddev Surana for his opening remarks, and then we will open the floor for question and answers. Over to you, sir.
Good morning. Welcome to the Ddev Plastiks Q2 half-yearly financial year earnings call. We appreciate your time and continued interest in our journey. Yesterday, our Board of Directors approved the financial results for Q2 financial year 26. We are pleased to share with you our performance highlights, key developments, and outlook for the future. As we reflect on this joyous celebration of Diwali and welcome the Samvat, I'd like to extend my heartfelt greetings to each and every one of you. I hope you all had a wonderful and joyous Diwali filled with light, prosperity, and happiness. May the coming year bring renewed energy, growth, and success to you and your loved ones. In the upcoming Samvat, we at Ddev Plastiks remain committed to a strategic path of engineering excellence, expanding our footprint and energizing growth. Ddev Plastiks delivered a positive performance in the first half of the year, in line with the expectations. Our operating margins remained resilient, reflecting the company's agility and success in navigating a dynamic market environment, supported by the strength of the domestic economy. The cables and wire sector continues to be central to India's industrial growth, and with rapid acceleration of electrification and the renewables push across the country, demand for high-quality polymer compounds is set to accelerate. Ddev Plastiks is strategically positioned as a reliable and trusted partner in this high-growth market. Our commitment to the engineering excellence and innovation has enabled us to consistently deliver high-quality polymer compounds, establishing Ddev Plastiks as the largest listed polymer compounds manufacturer in India with over 4 decades of industry presence. To keep pace with the surging demand in the renewables and power sector, we are steadily expanding both geographically and across our capabilities as well. As part of a growth strategy, we are taking significant steps to address the growing requirements of high-voltage cables while also aiming to strengthen our presence on the global stage in the years ahead. Looking forward, our focus will remain on enhancing operational efficiencies, broadening product offerings, and catering to the evolving needs of diverse industries, thereby creating sustainable value for all our stakeholders. Analyzing the broad economic environment amidst all the geopolitical conflicts, firm and resolute steps taken by the Indian policymakers to prop up demand. Thus, it is a reason for optimism for all corporates and consumers at large. The intensity of earnings cut has eased to modest levels, and the latest quarterly cuts have been the lowest in the past 4 quarters, thereby improving macro policy environment likely to support the demand and growth. Liquidity is in a surplus mode and conducive for transition in the festive season. Disposable household income should be boosted further by lower personal income tax outgo and GST rate.
Ladies and gentlemen, the line from Ddev sir has been disconnected. Please wait while we reconnect them. Ladies and gentlemen, We have Ddev sir connected back with us. Please go ahead, sir.
Improved sentiment and purchasing power in rural India should contribute to demand pickup as well. Moreover, even on the global front, while the situation is still evolving and stays in flux, it appears that the geopolitical whipsaw has been digested by the market. And now the Indian government trade officials are also sound more sanguine on better terms of trade with the U.S., punctuated by the likelihood of lower tariffs. The tariffs imposed by the U.S. are undoubtedly unreasonable and unnecessary. Nonetheless, they have a silver lining as they're pushing the government to implement long-term overdue reforms. Additionally, these tariffs are likely to motivate Indian companies to innovate and compete more effectively on the global stage. Further rationalization in GST is likely to benefit MSMEs, SMEs, rural and urban consumption. It is also likely to improve the discretionary income for the masses, which will benefit the consumer discretionary sector and improve the credit growth, which has been sluggish since FY25. One of the sectors which would be key beneficiary of this would be real estate, which would further create demand for wires and cables, which will impact us positively as approximately 81% of our revenues come from the wires and cable sector. The global energy landscape is undergoing a transformative shift with renewable sources, particularly solar and wind power, emerging at the forefront of this transition. This monumental change is simultaneously creating a surge in demand for advanced materials, especially polymer compounds, which serve as a critical enabler in a wide range of renewable and electrical applications. As India's largest listed polymer compounding company, Ddev Plastiks is strategically poised to harness this momentum. Our differentiated solutions, known for the superior properties for electrical insulations, corrosion resistance, heat and thermal stability, and long-term durability, are gaining wider acceptance globally, opening a multitude of growth avenues for the company. On the domestic front, India's energy requirements are projected to reach 817 gigawatt by 2030, with an ambitious target of sourcing 50% of the electricity from renewable energy. The country's transition to greener power, coupled with the transmission market estimated to nearly 60,000 crores, underscores a structural opportunity that will accelerate the uptake of high-performance polymer compounds. These structural drivers align seamlessly with Ddev Plastiks' core competence, establishing us as an essential partner for our evolving power and transmission ecosystem. Equally compelling is the trajectory of the Indian cable and wire sector, anticipated to expand at almost twice the pace of India's GDP. Fueled by rapid urbanization, heightened infrastructure investments, and robust electricity demand, this segment is expected to witness sustained acceleration. Polymer compounds are the cornerstone of this industry, and hence this growth will directly enhance our addressable market. Taken together, the convergence of the macroeconomic tailwinds and sectoral growth drivers builds a highly promising outlook for the next decade. At Ddev Plastiks, we are committed to reinforcing our market leadership, accelerating innovation, and delivering sustainable value creation for all our stakeholders. Our vision is not just to participate in this evolving energy infrastructure transformation, but also to play an enabling role in shaping it. Ddev Plastiks is India's largest manufacturer of polymer compounds with more than 200 compounds backed by 5 state-of-the-art manufacturing facilities which are strategically located across both the east and west coast. This well-planned geographical footprint not only enhances our operational efficiency but also enables us to optimize freight costs and serve customers with greater agility. Our current installed capacity as of September 25 stood at 238,400 metric tons per annum. We successfully commissioned a new PVC facility with an installed capacity of 15,000 metric tons in October 25. Furthermore, an additional capacity of 5,000 metric tons of HFFR compounds and 10,000 metric tons of PVC compounds is scheduled to be operational by the end of this calendar year. Today, we cater to a broader spectrum of industry and proudly export to over 55 countries globally, underscoring our strong international presence and the agility and ability to align with the global quality standards and benchmarks. Our progress and success are powered by dedication of a highly skilled workforce of more than 400 employees who bring expertise, commitment, and innovation at every aspect of our operations. Aligned with our vision statement, Ddev Plastiks is charting a course towards expansion and diversifications. We are committed to enlarging our capacity and activities across various fields through the implementation of new projects and the introduction of innovative products. Now I would like our CFO, Mr. Aryan, to add some more.
Thank you, Devji. Good morning, everyone. I would like to begin by extending my warm wishes to all of you for a very happy new year. I also hope you and your families had a joyful and safe Diwali filled with prosperity and happiness. We at Ddev Plastiks are pleased to report a positive second quarter and first half of FY26 results. As of H1 FY26, our volume stood at 99,937 metric tons, while our capacity utilization stood at 84%, registering 10% volume growth year-on-year basis. For the first half of the year, revenue from operations reached approximately 1450 odd crores, representing a 20% YOY growth. This performance was primarily driven by sustained strong demand in the wire and cable industry, coupled with increase in our average selling price. EBITDA stood at 154 crores with a margin of 11%, while PAT was approximately 99 crores, delivering a margin of 7% for the period. For the Q2 FY26, revenue from operations reached approximately 680 crores, representing a 70% YOY growth. EBITDA stood at 75 crores with a margin of 11%, while profit after tax was approximately 47 crores, delivering a margin of 7% for the quarter. We also saw sequential improvement in revenue and EBITDA per ton to 1,41,802 for the EBITDA for the revenue and 15,559 for EBITDA per ton. An improvement in our capacity utilization levels to 84%, highlighting strong demand landscape for Ddev Plastiks. This performance was primarily driven by strong domestic demand, improved export performance, despite the challenges posed by heavy monsoon and US tariff impacts. Looking ahead, we anticipate the positive demand momentum will continue in the upcoming periods. During the quarter, we continued our capex programs, adding capacity for Plus compounds of 5,000 metric ton, bringing our total installed capacity to 238,400 metric ton per annum. Production volumes also saw healthy growth of 8% year-on-year basis for the quarter, reaching 48,204 metric ton. Capacity utilization improved both sequentially and Y-on-Y basis, standing at 87%. Our capex plans remains on track with an expected investment of 110 crores for this financial year. We now open the floor for question and answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Guru Darshan from Kitara Capital. Please go ahead.
Thank you. I'm audible?
Yes.
Yes. Thank you for the opportunity. Sir, in the current quarter, we have done around 48,300 ton of volume, which is almost a 7% degrowth QOQ basis, or 8% of growth YO basis. Just wanted to understand what are the broad factors leading to lower volume growth in the current quarter, and also it would be helpful if you elaborate on the current demand situation is like. What's like?
So I would like to take the first question. See, generally, if you see the first quarter being the monsoon period, the cable laying and everything gets impacted. Sorry, for this quarter, second quarter. So because of that, if you track any of our second quarters, it always remains at the lowest as compared to, rather, it should be compared with the monsoon period. Whenever the monsoon is heavy, that quarter is comparatively lowest for that particular financial year. So if you see this particular financial year, first quarter we did roughly 52,000 tons of volume, and this quarter roughly 48,000 tons. This impact is, marginal impact is mainly contributed by the power cable and distribution cable segment, which is impacted because of cable laying. Otherwise, in most of the areas, if you see, we have grown. So this is just to give you a perspective why it is such. On the second part, as regards the demand, Kothari ji, I will request you to intervene.
in addition to what Aryan has explained, for the drop in the lower growth or the quarter-on-quarter degrowth in second quarter, the first thing is monsoon, and monsoon had been quite extended and severe this year, so that has impacted the demand. And second aspect is this US tariff, because which has kicked in the early August, so that also had an impact on our volumes. So both these things put together have impacted our second quarter numbers. Now, looking at the current scenario, we are seeing positive tick on both. The monsoon is not any more active, so we are seeing very strong demand and strong offtake forecast by our customers. So we feel that next 2 quarters, not only the third quarter, but the last quarter should be quite strong from the domestic demand point of view. And we are also seeing some optimism on the U.S. exports. We have seen the revival of the demand from our customers for U.S. market from now on. So we see both these factors behind us, and the next 2 quarters should deliver better growth.
Got it. Thank you, sir. Thank you. In terms of, EBITDA per ton, which has improved sequentially, and, year-on basis, which is around 15,600 per ton, would you be able to maintain the same margin considering you have added PVC capacity, which is a lower margin business?
So, as you see, we have added PVC of 25,000 tons, rather we are adding in this entire financial year of 25,000 tons. While we are also adding XLP capacity already added for 5,000 tons, HFFR being added for 5,000 tons, some other XLP compounds are also being added. So it's a blend. So what we are doing is we are not concentrating only on the lower basket, not concentrating only on the higher basket. Right now, we are concentrating on the demand factor first, followed by the blend, the product mix. So if we consider the both, definitely our guidance of range of 14.5 to roughly 16.5, 16.5 is something which we continue to remain. And the outcome, you can say the result of the same is visible in the second quarter.
Okay, understood. So one last question. So in previous calls, you had mentioned there is no difference in EBITDA margin with respect to domestic versus exports. In the current quarter, are you seeing any signs of improvement in margins in exports? Is the freight cost normalized or is it still at the higher levels? Just wanted to understand more on the exports.
Pathariji?
That to export EBITDA being equal to domestic EBITDA was during the period when sea freight has gone up substantially. But now we are seeing the margins recovering for export also, and a bit of higher margin we are getting from export transactions.
Understood. Thank you so much, sir. All the best.
Thank you.
Thank you.
The next question comes from the line of Arnav Sakhuja from Ambit Capital. Please go ahead.
Hi, thank you for taking my question. So my first question is, can you give us a bit of an update on the status of the trial of the 132 kV products in the XLP segment?
See, this is a topic where we have not seen any progress yet, because 2 key customers of ours, we cannot name them. So they both are running almost at full capacity and have not been able to allocate in any space for trial. But hopefully, this coming quarter, means January to March, we should be able to get these trials done, because third customer has very recently agreed to give us space in the first quarter of next calendar year, which is January to March 2026, a space for trial. So we are very hopeful now, almost sure that first quarter of 2026, calendar year 26, we'll see this trial getting through.
And just on your employee costs, so I saw that it increased to around 13.3 crores this quarter. So is there any specific reason for this increase? Is it a one-off, or can we use, will this be the run rate going forward?
So it is practically the annual bonus as well as the arrear, which has led to additional outgo in this particular quarter. When you want to see an average, then it will be an average of H1, which you need to follow.
Okay, thank you for answering my questions and best of luck.
Thank you. The next question comes from the line of Bobby J from Front Investments. Please go ahead.
Hi. Regarding the volume growth, you mentioned that the monsoons had delayed it. But if you look at the wire and cable players like KEI and Polycab, they have shown about 15% volume growth. How is that?
Yeah. So now, first of all, KEI, Polycab, and there are many more companies like RR, and then many more. They might have shown better growth in this season. And there might be many companies which might have seen degrowth in this quarter. We do not have an access to all the numbers of every cable company. So, but the fact remains, and it is historically, this is the fact, that monsoon season is a difficult season because you do not have the cable laying activity, because cable laying activity is done in an open space and you should not have any disturbance of rain. And whenever you are making trenches, there shouldn't be water in the trenches when you are laying the cable. So it is a common fact known to everybody that the rainy season will have lower activity of cable laying. And this year monsoon had been very, very severe. So this is a real impact. I really can't comment with regard to Polycab and KEI because they are having a very big mix. They don't do only the power cable. They do use volume in the building wire, where the cables are being installed within the shaded areas, means indoor installations are quite high.
All right, makes sense. Okay, the second question is, if I look at page 22 of your slide deck, you see the utilization for XLP and Cycloplast come down quarter on quarter, whereas PVC is going up. You know, it's gone up from 82% to, from 57% last year to 82%. Are we seeing a trend towards lower margins?
No. This again proves the point which I just conveyed to you. The PVC mostly goes for building wire application, for indoor application. That is why you might have seen the last quarter utilization for PVC remaining strong. But XLP and Cycloplast and semicons, they are mostly for power distribution application, where you have to lay the cable in the open environment. So there you might have seen some kind of lower utilization in the second quarter. That should pick up. So now when you compare the second half results with the first half result going forward, you will see that acceleration in the XLP and semicons would be greater than PVC.
Okay, I understand. And you also mentioned that HFFR sales, you say, were impacted by subdued demand due to effect of U.S. tariffs. Can you expand on that?
Yeah.
What does this really mean? Because we don't directly export. Yeah, please.
We do not export directly, but our customers, our cable makers are exporting cables to USA. So if they are not exporting cables to USA, they are not buying that particular raw material in this period. So that has impacted our demand and our sales for the second quarter.
So most of the sales for HFFR are actually going as exports, deemed exports, that is, from your perspective.
No, it is deemed export. It is domestic as well. So in domestic also HFR major this laying is again for power distribution application. Two areas. So these two areas have really impacted HFR volumes. And an addition, I should also, one more point I would like to highlight that as Arihant has made in this opening comment that we have added capacity of HFFR. So we have taken a bit of shutdown also to get ready for that new machine installation of HFFR. So some output has been lost because of that as well.
Okay, understand. Well, what percent is for exports in general for HFFR?
HFR export is around, say, whatever we are doing currently, around 25% is going for exports.
Meaning your customers are exporting?
Yeah.
I see. And also, why are you expanding capacity for PVC given its lower margins? Is there a trend towards PVC cables in the industry?
No, you might have heard that the people like Adani and Ultratech, they are adding capacity for wire and cable with the new startup. Okay, and both these companies will start their business initially with the building wire. Okay, and there the major consumption is of the PVC. And we feel that we have a great opportunity to serve the requirement. And for that, we are adding this capacity of PVC, just getting ready for the demand which we anticipate to come from these two giants, Adani and this Ultratech both.
I see. It's more for them. The last question, what is the significance of revenue per ton that you report in your slides? Isn't that driven by just raw materials mostly?
Aryan?
Yes. It is. You are correct. It is driven by the raw material, but as well as it is also driven by the product mix. When we move more towards the high margin products, or you can say the XLP segment specifically, then the average always goes up. So this is just, there has been multiple discussion over different calls that we don't reflect the average revenue per ton to guide properly what is the proper realization. That is why we added this specific slide for the, you can say, reference to the shareholders.
Even for this, what you mentioned, isn't EBITDA per ton a better indicator?
Yes, we are highlighting
for the product mix.
Yes.
Yeah, I understand. I couldn't quite get the significance. For product mix, EBITDA per ton should tell the whole story, shouldn't it? Give your profitability.
See what happens if you see the revenue per ton for FY23, it was roughly 174 rupees driven by the higher raw material prices. But in FY24, it came down to roughly 145, 146. So we grew by volume, but we didn't grow by revenue. So a lot of shareholders and investors were interested to understand why we say there is a growth, but it is not reflected. So that is why we specifically highlighted the revenue per ton to clearly show whether the growth is coming from increase in prices or increase in volumes. Both have been highlighted today in the presentation.
Okay, thank you. That's all from me.
Thank you. The next question comes from the line of Rishabh Agrawal from Surag Capital. Please go ahead.
Hello. Yeah, am I audible?
Yes.
Yeah. So few questions from my side. The first one was around gross margin per kg, because given that we have a pass-through model, and at an year-on-year level, we have seen a reduction of 5% if I just compare it for this quarter. Do we see any, is that just because of the mix change, because there is a higher contribution, or rather a lower contribution of XLP, or are we also seeing a higher competitive intensity coming from the more MNC players?
So it is more towards the product mix, and as you correctly highlighted, since in this particular quarter, the XLP has comparatively not grown or degrown by hardly some percentages, but PVC has grown. So effectively, the lower margin is higher, you can say, percentage of the revenue, and that is why the average gross contribution or gross margin you see is a marginal movement here and there. So that is something which will keep on moving depending on the product mix. But on a broader side, if you see, on a annual basis, except 1 year where it was an exception for us, if you see the last full year and this year, the margins are more or less in the similar lines. It has not moved much, except rather if you see the year of FY24. Rather, if I compare that with the previous years, then it has improved from there on, roughly from 85% to in the range of 81 to 82%.
The other one was, I know previous participants have also asked this question, but I want to maybe frame it in a slightly different manner. If we look at only power cable companies, which are more 33, 66 kV segment, they have also reported almost like 20%, 25% volume growth, at least for this quarter. So in your estimation, maybe it is advanced supplies which might have happened in quarter one, but do you see any market share difference, any reduction in pass-through pricing in the industry? Or do you, because I completely get it, monsoon has been, I understand that would have had an impact on volumes. But again, thinking it more from a market share perspective, what is your sense of your change in market share over the last 2-3 quarters?
See, what we hear from all our customers is that the monsoon period demand had been weak at their end. So that is a clear correlation between the performance of the cable producers who are mostly in power distribution cables and our performance. There we are having a clear feedback from all our customers. Additionally, our volume, a few percentage here and there, compared to all our cable customers, is impacted due to this US export impact. Because all Indian cable customers are not exporting to USA. There are a handful of them who are exporting to USA, but we are the key supplier to all of them. So if you look at the cable fraternity, you'll find 3 or 4 or maybe 5, or maybe some of them are in unlisted space also. They might have reported a drop in their volume due to the lower export to USA, but as a listed entity in the compounding segment who is serving their demand, we have seen the major impact on volume drop because of this deemed export to USA.
And so how would you think about your market share? Like broadly, where do you, like at a broad level, broad strokes level, what is, according to you, your market share in XLPE segment, in PVC segment, or even at a blended level?
Yeah, in fact, on the PVC, we have highlighted it in past, so I would repeat those numbers again, and we remain in more or less in that zone. That is that in PVC, the market share is very low, insignificant, I would say. It is below 10%, close to 5 or 6%. Now coming to XLP segment in the Cyroplast, high voltage, medium voltage category, our market share is close to 80%. And rest of the areas, the low voltage Cyroplast, our market share is close to 50%. Then if we come to XLP and semicons, our market share is 1/3 of the market. In HFR, our market share is close to 15% at the moment, 15 to 20% of Indian market. So this is the total overall scenario. And last quarter's numbers does not reflect any change in our market share.
Understood. This last question, accounting wise from my side, other income saw an increase, and generally we have seen you guys say that other income also mostly forms part of operating income. So any reason for other income being this quarter 10.8 crores, and what was the contributor to it?
Aryan?
Sorry?
Yeah, Aryan, the question was on other income. This quarter we reported a 10.8 crores other income.
Yes.
And we have said it in the past, right?
Yes. It majorly comprises of interest, income, and exchange gain and losses. If you see overall, our balance sheet numbers are also visible over there. We have a high amount of, you can say, deposits lying under FDs as well as mutual funds. So the return on the same is highlighted separately over there as per the requirement of India's. While this is a temporary arrangement wherein we are parking the excess balance to keep between the time bridge mismatches. So this is basically because of that.
Understood. Thank you. These are the questions from my side. All the very best to the rest.
Sure. Thank you.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. The next question comes from the line of Bhargav from Ambit Capital. Please go ahead.
Yeah, good morning team, and thank you for the opportunity. So my first question is that if we look at the volume growth in PVC, it is extremely strong, upwards of 40% on a YOY basis. Now, despite such a strong volume growth, the gross profit per kg, if we exclude other income, hasn't fallen much. So it's fallen by just 6% to about 24.5 rupees per kg. Does this mean that even in PVC, we are actually reporting higher gross margins in terms of per kg as compared to the past? So is there any value-added stuff in PVC, which means that going forward, even if the PVC contribution rises, the gross profit per kg at the company level may not decline much? Is that assessment correct, sir?
Bhargav sir, good morning, rather. See, we, as in various conferences, we have shared that in PVC also, we are PVC or other product where the margins are low, we are trying to do our best to improve margin wherever it is possible by introducing new product or the difficult products to be made by our competition in India. And in that process, yes, PVC demand had been very strong, and demand from building wire segment had been very strong, where people demand high performance product. So our PVC segment also had a share within this PVC compound group. We had higher share from better earning products compared to the lower earning products. That is why we have not taken such a serious hit to our final EBITDA, despite PVC contribution being high.
And sir, when do we start getting demand from the newer players in PVC like Adani and Ultratech? And is it fair to say that herein again the margins on PVC will be better than our existing customers?
Yeah, with these new two customers, they are going for building wire segment. So their demand, their requirement will be of high-end products. So definitely the EBITDA should be better than the average of the PVC compound, and we expect their demand because we are regularly in touch with them, their teams. So what we hear from them that they should be able to start their production somewhere in the first quarter of the calendar year 2026, or the worst case first quarter of financial year 27.
Okay, great. Thank you so much for the answers and all the very best.
Thank you.
Thank you. The next question comes from the line of Jyoti Singh from LIC Mutual Fund. Please go ahead.
Yeah. Hi, sir. Good morning. Thank you for the opportunity. Yeah. So first question is in terms of your guidance, if you can give, like, how do you see your margins and volumes trending for next two? How do you see the demand?
I'm sorry to interrupt you, Ms. Jyoti, but your voice is breaking in between. Can you please go to a better network area?
Able now?
It's still breaking, ma'am.
No issues. I got the question from her. She wants to understand the guidance for this financial year as far as the volume growth and the margin profile is concerned.
And so, also, like, how do you see the... Hello? Hello, am I audible?
Please continue.
Yeah. How do you see the demand visibility in your end towards the end user industry or the capacity utilization going ahead?
Sure. So when you see the volume growth targets, definitely we are on track. We achieved roughly 190,000 tons in the last entire financial year, and this year we have a target to achieve somewhere in the range of 210 to 220. That is the overall target we are focusing on. As far as the EBITDA margin is concerned, see, our focus and our guidance has always been categorically clear in the range of 10 to 12%. And we can say blessings of God are at an average of 10 plus as of now, and we hope to be in the same queue only. As far as the demand factor is concerned, Kothari already highlighted that the second quarter remains comparatively impacted quarter due to monsoon, and this year being a heavy monsoon, it has been an impact. It's supported by US tariffs. Otherwise, there have been an increase in there are chances of export, which were also impacted in this particular quarter. But going forward, we see a very strong demand as we see the domestic strong demand in this particular quarter also, and we envisage that with the demand which is there in this 2 quarters, expected in this 2 quarters, we'll be able to achieve our given target. So roughly you can say we'll be able to achieve our revenue in the range of 2,850 to 2,950 odd crores, and margins will be in the range of 10 to 12% of EBITDA margin.
Okay. Yeah. That's helpful. So my second question is pertaining to that I want to understand how is the nature of your order cycle with respect to your key customers in terms of how typically do you receive orders? Is it on the spot basis or like aligned with the immediate demand, or there is a lag period?
Generally, ma'am, what happens when we are dealing with big customers who are the leaders in the industry, and then there are tier 2 as well, most of the companies give us an indicative plan for the month at the start of the month or at the end of the previous month. Now, the demand flows or the order flows every weekly basis at the spot prices. So whenever there is a change in prices, the next prices will prevail. So it is basically a spot order, but with a planned order, you can say production plan, or you can say whatever is the lifting plan, is something, an indicative is being given to us. This is majorly driven by for the domestic customers. For export, again, there are two types of customers. One, who give us a order or a plan for a definitive period, which can be 1 month, 2 months, or max 3 months, whereas there can be customers who come on spot basis also. So in both the cases, when you talk about the planning for dispatch, it happens on the basis of dispatch schedule, while in case of spot orders, the pricing is spot. In case of the you can say a tenure order, period order, which can be 1 month, 2 months, or 3 months at max, these are having some leverage in terms of tolerance of prices, because there can be increase and decrease in the freight rates and the prices of raw material. This is how practically the pricing and the lifting happen.
What is the ratio in terms of your spot versus your tenure orders? Is it more of the spot basis, or is it more
of the spot basis? You can say roughly 75 to 80% is on spot basis.
Okay. Then if you can give a guidance, like you said about this year capex, what sort of capex can we expect for the next 2 years, because we are majorly into the expansion mode? So what sort of capex are we expecting for the next 2 years?
See, ma'am, we announced roughly 300 odd crores a year back for the entire capex plan, and we are on track for the same. Last year we did roughly 50 plus odd crores, 55 to be very precise. This year we have committed for 110. Maybe we will end up doing more than that. Next year also we have plans of investing more than 100 odd crores, and with this is only the pure capital investment in terms of physical assets which we are talking about. All these investments will need an additional working capital margin as well, which is over and above this. So if we are talking about a capex of roughly 300 odd crores, you should consider that there will be a margin requirement of additional 300 odd crores also. So overall, the investment which is flowing into the business is approximately 500 to 600 odd crores.
Okay, can you expect your 27 capex year in terms of your original guidance of 300 crores?
Sorry, I missed your words. Your voice is not clear.
Can we expect your FY27 to be a peak capex period, considering your earlier announcement of 300 crores?
So the peak investment year will be this financial year and next financial year as far as the current capex announcement is concerned. But since we are already on the capex mode and expansion mode, once this comes to a position that these are all running and the demand is envisaged, we may plan for additional capex also. So that is a continuing program. We are just following the you can say path which we have already announced and going ahead. Once we come to a point that it is, PVC was never announced earlier, but PVC has been done. So in the same manner, as soon as we see a good demand for a particular product, we may add additional capex for that as well. So that is how it is, a continuous exercise.
Okay. So if I may put in one question. So basically I want to understand if you can provide a roadmap towards your target of achieving 5,000 crore by FY30 revenue basis. So if you can just give me a roadmap on that, what sort of growth you are expecting?
So if you see the roadmap, we have already guided that roughly 14 to 15% on CAGR basis will be growing every year. And if you see the last 3 years, we have been growing at the similar pace of 13 to 15 odd %. And we continue to maintain that, and for that, whatever capacity needs to be added or physical infrastructure needs to be built, everything is in pipeline, is being done. If we are required to build a brownfield site, we are building those sites. If we are required to build a greenfield site, we are not shying away from it, and we are working on it.
Okay. Lastly, just wanted to understand how do you see your new investments pertaining to 132 kV and 210 kV? How do you see the market demand for this particular product? Do you see the market demand particularly coming to these products beyond 16 EBITDA per ton in terms of kg?
See, as far as the demand is concerned, it has got a good demand, and earlier there were only a couple of players in the country. Now the number of players increasing year by year. So definitely the requirement for the same product in India will go up. We are on track, only we are delayed as far as the first testing is concerned, because we want to do it with an Indian player to take it global. We don't want to do it on a global scale and then come back to India, because it will take more time than we envisage. So we want to do it here, and as Kothari-ji highlighted at the start of the call, that it is planned now in the first quarter of the calendar year, calendar year of 2026, and hopefully once that is done, we will be through with our 132 kV cable compounds. Now, once the trial is through, we'll plan for the additional capex for that, which is already in pipeline. And once we supply the 132 kV cable compounds for a couple of years in the market, we will be working on 220 as well. So 220 as of now seems to be going ready by 2029 or 30. But 132 is something which will be visible in the next calendar year.
Okay. Thank you also. That was very helpful. Thanks for the detailed answer.
Thank you.
Thank you. The next question comes from the line of Vignesh Iyer from Sequent Investments. Please go ahead.
Thank you for the opportunity, sir. And so my question is more on HFFR product in near term. I mean, with the extended monsoon.
I'm sorry to interrupt you, Mr. Vignesh, but your voice is not clear. Can you speak through a handset, please?
Yeah, I'm on handset only. Hold on a second. Hello, is it better now?
Yes, sir, you're audible.
Yeah, okay. So my question is more on the HFFR part of it in near term. I mean, with the extended monsoon and this quarter being the first full quarter with the 50% tariff, I mean, how has the offtake been for this product in this first half of the this quarter? I mean, the 45 days. If you could give some idea about it, because there are few players who are on the export side of it. They have been very cautious about how things are compared to last quarter, because last quarter was more of a mix of 25 and 50% tariff, but this being entirely a 50% tariff quarter, there seems to be some slower offtake on their part. So if you could share your insight on this part.
Let me take this question. See, on the HFR, the volume contribution comes not only from the deemed export to USA, but also from the renewable energy segment in India. As we explained in the case of earlier question, that installation and activity for solar installation was also low during monsoon season. That has picked up already, and we are seeing revival of the orders to USA also. So this quarter, the statement which we are making is that we see better demand for all our product across the board, and also HFR is based on what we have seen in last 45 days. So the demand is coming back.
Okay. I mean, the question was more on the lines, not on the, I mean, you will eventually get your guidance for the full year, but would it be fair to say that the quarter 4 would be having the major chunk of the volume and revenue for this year, and quarter 3, could be more on flattish or a bit more than what it was last year, same quarter?
3 and 4 both are bound to be better.
Okay, got it, sir. That's all from my side, and all the best.
Thank you.
Thank you. The next question comes from the line of Tia from Sapphire Capital. Please go ahead.
Hello, sir. Am I audible?
Yes, you're audible.
So I just wanted to understand what our EBITDA per ton is going to be for Q3 and Q4 going forward.
See, it is very difficult to quote the EBITDA per ton immediately on this basis, but yes, as I highlighted, it depends on the product mix as well as the export and domestic mix. So, on a broader sense, we can say in this particular financial year, we have been on an average been above 15,000 rupees per ton, and we hope that it will be continued for this entire financial year. We initially guided for EBITDA per ton of 14 to 16 rupees, but you can see as the period graduates, we are doing better. For the first quarter, we were at roughly 15,300, and this quarter we have closed at roughly 15,500. So we are improving. Product mix is improving, and with now there has been lower intensity of monsoon, no issue as far as the rains and cable laying is concerned. Things will improve from here. We see from that perspective. Though PVC mix will be added, which will drag the average EBITDA a bit, but we don't see it is going below 15 for definitely.
So hopefully we can reach like a 16,000 per ton.
Maybe. Yes, maybe.
Yeah. And for and the revenue for the whole year, can we expect it to be like 2,800, 2,900 or higher than that?
Yes. We have already guided for a revenue of 2,800 to 2,900 already for this financial year. Rather, to be precise, it is in the range of 2,850 to 2,950. So that is the guidance for this particular financial year.
And grow by another 10 to 12% for the next year?
See, on CAGR basis, definitely will be growing at 12% minimum. We to meet our targets of FY30 of 5,000 odd crores, we are on the same track. And hopefully, if you see the percentages back calculated from 5,000, it is roughly coming to 12 to 13% only from today.
All right, sir.
The volume is already growing at 10 plus percentages.
And that you said like that we can achieve like 2,10,000 to 220, right? For FY26.
Yes.
And also the 110 crores of capex. How much have we done by now?
So we have already committed 90 plus for this first half.
All right, sir. And the remaining is for us to be either doing that or higher than that.
Yes.
All right, sir. Thank you and all the best.
Thank you so much. Thank you.
Thank you. The next question comes from the line of Saket Kapoor from Kapoor & Co. Please go ahead.
नमस्कार सर.
नमस्कार साकेत जी.
हाँ सर, धन्यवाद सर ये अपॉर्चुनिटी के लिए. Just coming to your reply, Aryan ji, you mentioned about capex of 90 crore that has been planned for the that has already been spent for the first half. Committed. अच्छा सर, क्योंकि सर कैपिटल परचेज ऑफ प्लांट प्रॉपर्टी में बैलेंस है हमारा 22 करोड़ एंड क्लोजिंग बैलेंस इज 14-15 करोड़. तो कमिटमेंट हो गया. हाँ, कमिटमेंट हो गया. वी हैव नॉट स्पेंडेड, नॉट इन्वेस्टेड एज ऑफ नाउ.
उसमें से पार्शियल स्पेंड हो गया होगा, पार्शियल एडवांस होगा, सब मिला के 90 करोड़ ऑलरेडी इस फाइनेंशियल ईयर के लिए कमिट हो गया है. When I tell about commitment, practically I am talking about already the purchase order being issued to the vendors.
Correct. No, I got it. Now only the process will follow and on milestone the payment will be made.
Yes.
सर जब आपने EBITDA per ton बताया है trajectory of 15,500 and higher, we are also factoring the other income component into it for this quarter also, sir.
Yes. See, other income, हम presentation के लिए हमको अलग करना पड़ता है साकेत जी. But when you see the components of the same, when I talk about interest, at one point I am showing that I have a higher interest cost in this particular financial quarter, and at the same time I am showing there is a higher interest income also. That means I have to borrow from someone and I have to park that money at mutual fund or FD level. it is because I have to keep my limits alive. Because when you see the requirement for the coming future, we are talking about 300 to 400 crores of additional working capital requirement. So if I don't keep my working capital alive, then I will be suffering from cash flow mismatches. So to ensure that everything is in line, we have to do an arbitrage from both sides.
Earlier, Rajenji, you have also mentioned about some annual discounts which we used to receive, and then you also mentioned that we are now going to make it more linear. So what has been the impact of that? I think some RM पे आपको discount मिलता था सालाना.
तो वो already linear है. आप देखिए quarter on quarter basis, आपका volatility in margins is gone completely, rather in terms of the RM side. When you see the margins which were there earlier when it was substantial movement, probably आप लोग highlight करते हो specifically financial year 24. When you compare from that year, definitely it has a sustained quarter-wise margins which are there. It is only because see,
Aryan, can I come in here?
Please.
Yeah, see, Saket ji, it is Namaskar ji. This discount distribution by the suppliers is structured. Okay, any blip, I would say up or down, happens in 5-7 years one. So 2023-24 was a year when a new supplier came in, which we explained in one of our earlier conference call, and then you have seen the loss of linearity as far as the discounts availability is concerned. But rest of the time, you will see that discounts are linear. They are being passed on quarter, and we account for accordingly.
And the RM prices and the availability is currently, there is no exaggeration in any of them?
No.
Okay. Sir, when जब हम mention करते हैं कि HFR will be the one where we will be upping our capacity on the higher side, so taking that into account, what would be its mix, in the total mix, how will this product look once we up our capacity to our desired level?
Saket ji, होता क्या है कि जब हम discussion करते हैं तो we highlight the products which are having low base. Okay, so HFR had a low base, so उसको जो mass जो scale हमको achieve करना है, उसके लिए उसमें capacity addition उस base के मुताबिक आप देखेंगे multiple times हो रही है. But in tonnage it is not that significant. Okay, 5,000 का 25,000 जब हम बोलते हैं तो it is 500 times, means 5 गुना हो गया. But tonnage wise it is only 20,000 tons. Whereas in XLPE your base is already 150,000 tons per annum. तो उसमें even आप 20% भी add करते तो 30,000 capacity add होता है. So the mix of the entire this revenue picture and margin picture will not change significantly. But yes, this product is a product of future and जिसमें हमको scale build करना बहुत important है. तो हमारा जो commentary है वो इस चीज को highlight करने के लिए हम HFR के लिए commentary आपको बार-बार आपके सामने रखते हैं. That it is a product of future where scaling up the capacity is very important because market size बढ़ेगा और इस product की significance बढ़ेगी.
जी सर. And sir, जैसे अरियन साहब ने आप लोगों ने confirm किया कि utilization levels have been lower for this quarter because of firstly the monsoon impact and then the US tariff. So going ahead, our averages earlier used to be in the 85-87%. So and exit of the year, ये 81 से what should be close the year? I think so. You gave a number 210 as the base, 210 as the total. Yeah.
That is because उसके साथ में बहुत सारी capacities भी live होंगी. तो खाली percentage देखना will not be the right picture. It is more important to see the absolute number.
Okay. So sir, for H2 exit, what should be our total installed capacity?
See, by end of H2, as of now, we are saying the capacity will be in the range of roughly 270,000 plus because PVC 25,000 add हो जाएगा, HFFR 5,000 add हो जाएगा. 238 पे हम खड़े हैं और 30 already add हो रहा है. 268 पे already आ जाएंगे and then there we are working on some other capacities for XLP and other segments also.
Okay, but to be very precise, that these will not be margin accretive product. Both PVC as well as HFR is also not incomparable to the highest margin product, Thioplast. These two will be only dilutive in nature. So we are confident that जो आप margin बता रहे हैं ये maintained होगी going ahead.
So HFFR is not dilutive in nature. First of all, let me clarify. As far as PVC is concerned, we are adding this capacity seeing the future demand. Out of this, the capacity utilization may not be as high as we see of XLP, because those demands are not expected to be feasible in this particular financial year. It is expected to go live in the next financial year for my customers. So definitely the demand will not come in this particular financial year. It will be more of the current structured products which are going into the market. As Kothari highlighted, we are working on few components of specialty in PVC also, and then we are working on exports also. So that are few products which are contributing to the comparatively better margins and better product mix. As far as the current product mix is concerned, as far as PVC is concerned. In going forward, since usme और PVC add hoga, house wiring add hoga, margin profile may not be as high as we see in XLP. But in the products of PVC segment, definitely it will make sense.
Right, sir. And so this US tariff part has played out into its negative impact, or we have readjusted with the same, or this will have its lagging impact going forward also, because tariff का issue में सर अभी कोई समाधान तो नहीं आया है.
Kothari ji?
See, जब तक समाधान नहीं आता तब तक you cannot extrapolate or you cannot project anything. But what we are trying is that US को export खाली India तो करता नहीं है, बाहर के लोग भी करते हैं. And some of our certifications have come. So on the basis of those certifications, we are trying to tape the customers outside India also who are exporting to US market. So वहाँ पे हमको जो है थोड़ा ट्रायल में और जो समय लगता है 4-6 महीने, तो हम उम्मीद करते हैं कि ये इसका टैरिफ का इम्पैक्ट जो है लास्ट क्वार्टर में सीवियर था, इस क्वार्टर में what we see from our customers in India, that they see that the impact will be less. They are hopeful of resolution either in the duty structure or from their customers' end, or whatever way they see some better volumes this quarter. And in the meantime, another 2 quarters time or maybe 1 quarter's time, we'll be able to garner new customers overseas market also for this product.
Right. नहीं सर, धन्यवाद सर आपके सभी उत्तर के लिए, and a very detailed investor presentation, sir. It answers many of these questions and gives a lot of insight. So good job done by the team, sir, and we hope for the continuity. Thank you, sir.
Thank you so much.
Thank you. Ladies and gentlemen, as there are no further questions from the participants, I would now like to hand the conference over to the management for closing comments.
Yeah, this is N.K. Surana. So I hope, I thank everybody for participating in this investors conference call, and I hope that our team comprising of Mr. Kothari, Mr. Aryan Bothra and Ddev, everybody has, replied to the satisfaction of all the investors, and I wish everyone good luck. Thank you very much.
Thank you. On behalf of Ddev Plastiks Industries Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.